Hey, my name is James Wilkinson. It's good news today. A central bank has finally cut interest rates. A central bank in the G7, no less. Now, this is good because no one wants to be first. They're all sitting there waiting for someone else to pull the trigger. And the good news is one of the central banks did it today, and a second central bank is expected to follow suit tomorrow. Now, this gives more opportunity, and the markets are already pricing in that the Federal Reserve is way more likely to cut rates in 2024. Now, Bank of England often follow the Fed, and lots of things have happened today. So I want to talk about this, what this means for interest rates, what it might mean for swap rates, which is really how your mortgage rates are priced. So we're going to talk about that and much more in this video. So before we jump into this, as always, if you haven't done, subscribe to the channel over there and hit the bell notification. We're on the way to 25,000 subscribers. We had a great influx of subscribers this week, so make sure you do subscribe and hit the bell. And while you're here, smash like, tickle like, do something to that like button over there. Just make it turn blue, even if it's out of anger for being asked. Just do something to the like button, guys. It helps with the YouTube algorithm, and it makes you an all-round good person. So, who's cut rates? Well, Canada has gone first, and they have cut their interest rates today. And so this is good and a good start to June. So Tiff Macklem is the Bank of Canada's leading person. They've done their press conference today, and they have cut their rates down from 5% to 4.75%. So a 0.25% drop. It was always going to be just a short drop initially, and that's what probably the Federal Reserve will do and the Bank of England will do, just to do something to stimulate the markets and get people a bit excited about it all getting started. And I believe that probably all central banks will start with a 0.25% cut and just see what happens. So this is good, right? This is a good start because you want someone to go first, like I said. Canadians have gone first. Yes, they're not the biggest, but Europe is looking to go tomorrow, and they're expected to do the same. So that's good. Now, this was priced into the markets at 80% likelihood happening. Just to give you an idea on what that compares to the European Central Bank cutting rates tomorrow, that's priced in at over 93% at the moment. So it's pretty much nailed on that Europe are also going to cut their rates as well. Now, what also happened in the Canadian meeting, which is interesting, is they said there are more cuts to come. They feel even with this cut to 4.75, with the drop in Canadian inflation, which let's just say what that is at the moment, that is 2.7% higher than the UK inflation. That's important to note. So it's higher than the UK inflation, but they're still cutting rates because they're saying that inflation is just going to drop. It just will take time. There's not much more they can do. It's just a case of waiting for inflation to drop. Because remember, some of the inflation data, or all the inflation data, is a 12-month average. So maybe the inflation's dropping now, but we're just waiting for some of that old higher data to drop off, which is, I have said, what we're expecting to happen in the UK with the next lot of inflation data. So that's pretty positive. What else can we take away from this? So they said there are more rate cuts on the way. Even with those, they still think it will be in restrictive territory, meaning it will be pushing down inflation, which is good, right? So hopefully the Federal Reserve feel the same. So what's going to happen tomorrow in the Eurozone? Well, the Eurozone central bank, they're at 4%. 4% their rate at the moment, and they're looking to cut to 3.75%, a 0.25% off. Again, like I said, I don't think anyone's going to go for any massive drops down. But here's where this gets good, because your bank, the bank that you want to borrow money from, they borrow on something called a swap rate from bigger banks. Now, because the cost of money in these areas has got cheaper, there's a chance, and we've got to see how this plays out, there's a chance that over the next month or so that the swap rate might drop. That might get passed on to you, might get passed on to me. We might get, if we're lucky, 0.25% drop in the mortgage rates that we get. Maybe that might not happen. It might not happen until the Federal Reserve or the Bank of England drop, but it's definitely a positive sign. Both of these regions feel inflation is kind of behind us now. It's still here. People have got some pain, but it's moving in the right direction. And there's not really much more they can do by keeping rates higher. It's just a case of over time, this inflation is going to drop, and that's relatively a good thing, and that's what we want to see. So Bank of England, it'll be interesting. I'll be doing some digging to see if they do any comments against the Canadian drop and the Eurozone drop. Probably will. You'll probably find some interviews that some of the board members have done there, and maybe they'll give us an indication on if they feel June is the time to cut rates. The only problem we've got in the UK is the election. So the election being so close, it's only a few weeks away now. That might mean that we drop interest rates in August, unfortunately, because they don't want to be seen to being political, and for waiting just a short period of time. Does it cause more damage to people? Well, I think it does. Should it happen before? I think it should, but I do understand also that they don't want to be seen to being political and helping the Tories potentially go back up in the polls. So this is a good news story. It's not been all good news this year, has it? We've had sticky inflation, we've had interest rates going back up with lenders, but you've got to look on the positive side. It is finally starting. We have seen one G7 place. Canada so far has dropped their rates, and I would bet money on, I'd be very confident to bet money on the fact that the Europeans are going to do the same. So what do you think this does to the market? Because speaking to agents, speaking to you guys in the comments, the market, and speaking to my solicitor today about a deal I've got going through, it's slow at the moment. There's so many people that need to do transactions, but they've just got their wait and see approach. They want to wait till the Bank of England drops rates. They want to wait till the election goes through. And this normally is a busy time of year. So what I think you're going to see in the data that we'll get in the end of the summer is that house prices are probably dropping a little bit right now. Not much, but I think they're going to drop a little bit right now because those sellers that have got the property on the market today probably aren't getting lots of viewings, probably aren't getting lots of offers at the moment. They might be getting the viewings, but they're definitely not getting the offers at the moment because people want to wait and see, right? And so that means that prices might drop marginally, but I think, as I said in yesterday's video, that by the end of this year, you'll see a flat market, a marginal drop or a marginal rise. Let me know your thoughts and opinions in the comments below. Do you think this means the Bank of England will cut rates sooner? Comment below. Do smash the like, do share this video, do subscribe. Go and check out some more content on my channel, including this video right here.